So we have brought a veteran today to speak to us on how to manage our personal personal investments. I beg your pardon. So without further ado, I kindly request that you join me in welcoming to the electronic podium, Mrs. Ijeoma D. Obatoyinbo. Ma, you have the floor. Thank you very much.
Thank you so much, Florence. Good evening, everyone. Good evening.
Good evening.
Good to see you all, even though we're not all together. We thank God for the opportunity to come together in this format. And I am hopeful that the day will come when we will be back to meeting with one another in person. But thank you so much for having me. It's my great pleasure to be here. I have a lot of good friends in this group, and I'm just very proud to be part of this community and delighted to just, participate and share with you guys today. So thank you so much for having me. It's a blessing to be here. So I guess I'll jump right in the interest of time. I won't speak for too long because I'm actually more interested in hearing some of the questions that you all might have. And getting a sense of what some of your concerns are in this current environment and some of your personal challenges with respect to financial decisions. So I won't speak for too long, but I will speak for a little bit and just present my views on along a few different lines, starting with our present environment. The present market. And for those of you who are more savvy investors and who have invested in the past and are looking, how many minutes I have before we should stop and so I don't go.
Okay, you have 30 minutes for the presentation.
That's sort of time. Okay, so great. So again, thank you everyone. I'll just start by touching on the present situation. What we're dealing with as a global economy is certainly no secret. What we're dealing with within the Nigerian economy, health challenges. I might just ask everyone to go on mute if you don't mind. What we're dealing with in terms of COVID-19. And one of the things that it has really underscored, I think, for all of us right now is the importance of being prepared and crisis management. Those who work in corporate probably have seen that the companies they work for have gone into full crisis management mode, moving people to work from home, trying to take care of the technological needs, psychological needs, financial needs, and all other needs of their staff during this period. On a personal level, it's also important to have a sense of crisis management. This is an unprecedented pandemic for our generation, certainly. I don't think any of us have lived through anything like this in the past. And it really underscores the importance of being fiscally prepared, financially prepared as individuals to take care of the challenges. And I'm talking about things like, certainly a number of companies are starting to lay off staff. A number of companies are reducing salary, hopefully temporarily, but that's definitely happening. We've seen increased pricing because it's harder for us to source goods and services. All of us have gotten phone calls, I'm sure, from family members in the village and workers and people that we engage with who might need some extra help. So there's a lot of financial challenge that this pandemic has brought about, and it really underscores the need for us to be prepared for anything. And everyone also has to be prepared to meet their ongoing and future obligations. Many of those things just haven't gone away. If you're paying, going to continue to pay rent. If you have debts to pay, you're going to continue to have to honor your debts. So we have a lot to deal with in this present shock. There are indications that the unemployment rate in Nigeria is going to increase well over 30% in the course of this year, and it may continue to increase. So those are some challenges that we have to deal with. So when I talk about being personally prepared, oh, sorry, it looks like you might have trouble hearing me. Sure, can you hear me a little bit better now?
Yes, we can. We can, Ijeoma. It's okay. You can continue.
All right, I can always move to a headset if it's easier. So when I talk about being prepared, I know there are concerns like this one. You know, we all saw the run on the banks that happened, I guess, on Monday, when folks were finally, you know, at least partially released from the lockdown. People charged straight for the banks. And that is not uncommon. Even in the Western world, whenever you have an economic shock like this one, there is a tendency to panic. And you immediately wonder, is my money safe? Even though ATMs are there and debit cards are there, there's always that concern about one's own capital. And that's part of the reason why there was a run on the bank. There is no reason to be concerned about the capital you have sitting in the bank. This pandemic is not going to cause money to just disappear. All the prudent practices of government and CBN and other individuals, the entire private sector, has a lot to lose if that happens. So there's no reason to worry about that. And equally, there's no reason to think that you cannot continue to invest prudently in this environment. What happens in an environment like this is you just have to look for slightly more secure, maybe less risky opportunities based on your own risk appetite. So I want to make some general comments in a second topic about prudent investment practices, generally speaking. And, you know, one thing I've always thought we as the financial sector have failed at doing, it's in really educating people on prudent personal financial management, starting from an early enough age. Nobody should ever feel shy or no one should ever be bashful about not knowing as much as they may feel they should know about managing their own finances. I can tell you there are CEOs of big companies who really don't have the first idea as to how to really prudently manage their own money. You have folks who are very successful that are still, you know, still have money, cash, sitting in safes inside their house, maybe even under the mattress inside their house. I think there's just a lot of lack of easy to understand information about the best way to manage finances. And I would say, you know, I try to teach my children, you know, it starts from even just, you know, collecting money in a piggy bank, or what do you do with your allowance when it comes and all that. I'm personally want to start talking to my kids' school about maybe getting, you know, once a semester or something, just getting folks from the financial sector to give presentations to kids, just the basics of personal finance, because I really do think it's a failing of the financial services industry that we don't educate people early on. So rule number one is don't be shy about what you may or may not know about managing finances. It's perfectly fine. To walk into a bank and speak to a financial advisor is what we like to see. And it shows just how much importance you have assigned to managing your finances. So rule number one is don't be shy about it and just jump right in. It's not nearly as complicated as some think it sounds. Another prudent practice I would say is always budget. I have an app on my phone. It's called iExpense, literally the letter I and expense. I don't think there's an E. I think it's IXPNSE or something like that. And I write down every single thing I spend. iExpense is an app you can use to just, you know, they have little icons. It's very easy to add, you know, whether you pay, you know, your housekeeper or your nanny's salary, or whether it's, you know, you went to Ebano and you bought something, or, you know, you've made a contribution or a donation to something. It's just an app that allows, you know, it allows me to just record all my expenses. And I find, you know, the same way they say, if you're dieting, write down all the food you eat. If you're trying to budget and be financially prudent, write down all the money you're spending, because you'd be surprised at how much you can end up spending without even realize that you've spent so much if you're not keeping track. So I try to do that. Also, you know, so I've talked about budgeting, I've talked about writing down, I've talked about teaching kids, you know, just teaching children and even older people just in your lives about the importance of financial prudence with your personal finances. And also many of you, I know, have your own businesses and are entrepreneurs, and that's fantastic. But be very careful if you're young and you've started a business of your own about separating the finances of your business from your own personal finances. It's very, very easy to think that you have, you know, a personal obligation to meet the needs of the business, and you're always going into your own pocket. That becomes a real big problem, especially if you apply for a loan for your business. There is a limited liability that you as an individual and an entrepreneur should have with respect to your own finances and the finances of your business. So if you're an entrepreneur, if you're starting your own company, if you're fundraising for your own company, be very careful about just separating the two. It's very important. One should not be tied to the other. And always think, you know, I feel like everybody should be investing. If your money is just sitting in Union Bank or Access Bank or GT Bank, and you're only in a savings account or maybe a fixed deposit, there are far better options you can get out there that are secure, that are focused on capital preservation, where you will get much better returns than whatever you're getting in a Nigerian savings account or a fixed deposit account. So start somewhere. Start small, but definitely start somewhere, putting money away and investing. And when you are investing, I'll get into different options in a moment, but you always want to think about what you're trying to accomplish, what stage of life you're at. For example, you know, if I think about my parents are in their early 70s. They have no business with high risk, you know, capital appreciation types of investments. Their focus is really just capital preservation and income. They're both retired. So ideally, they're invested in securities that are somewhat liquid and are churning out on a quarterly basis a little bit of income that they can use for their own livelihood at this stage. But they do not want to lose money. They're not about to invest in the latest fintech. It's not for people who are in their 70s. If you are sort of at my stage of life where you are raising children and you're building up, you can take obviously a little bit of risk. You do want to preserve capital, but you can take a little bit of extra risk to try to focus on, you know, downside protected capital growth, if you will. And I would say at my stage, you also want to be somewhat diversified. So a portion of your capital is going to more secure, maybe a simple mutual fund, a money market fund that is low risk, but is giving you some decent yield. And then a separate segment can go into a slightly sort of medium risk mutual fund as well, that's maybe more focused on public stocks, well selected by a good manager if you have your capital sitting with a decent manager. So think about your stage of life. If you're very young, if you're in your 20s, you're not yet married, maybe you've gotten a decent bonus or you have a little cash at hand. Again, diversify. Don't put all the money into one risky play, but you can find a mutual fund that takes slightly a little bit more risk just because you have a lot more time. There will be volatility in your portfolio, but over time that will smooth out. And net, you should be able to take advantage of some of that good yield. You haven't been too tight fisted big risks. So it's really different depending on your stage of life. And it's important to have a financial advisor that can advise in accordance with your stage of life and your own personal capacity for risk and also your obligations. You know, some folks may be looking after their parents. Some folks may be sending people to school. Some folks may be wanting to save some money to start a business someday. So depending on where you are, you ask yourself those questions and you just make sure that you are investing in the right type of product for your own stage of life. So that's very important. One final point I'll make on prudent practices for you guys, because I'm sure some of you are married, but many of you are yet to marry. And I'll say that this whole wedding business, you know, I know we ladies, you know, we dream of having this fantastic wedding and it's a beautiful thing, but let's not go too crazy. When it does come to the point where it's time to get married, you don't simply millions on your wedding. Ask him if he can just use that money to start an investment fund for you, or just give you guys the cash and you'll just have a nice small modest wedding. That whole thing is literally one day, and you have your whole lives to think about with respect to building capital. I've seen people literally go bankrupt, or parents go bankrupt because they wanted to give their children a big grand wedding. And I can't think of a worse way to spend money. So I think as you're thinking about, getting married and some of those other events that tend to cost a lot of money, big birthday parties and all that, just think about the dynamic whereby that's just one day versus your whole life to maybe seed an investment that can continue to pay off literally well into your years. So just something to think about with younger folks. Now, investment options, and I'll group this into two. Basic, if you've never stepped foot into a financial advisor's office and you just want to know, where do I even start? So you can start with your bank if you're comfortable. There are many, financial services firms out there that will go beyond that and may assign you to a financial advisor that can talk to you about what your various investment options are, or they can send you some teasers to get a sense. A really great way to start is a low-risk mutual fund. For example, at FBN Quest, we have a money market fund that's very low risk. It's designed for capital preservation, for liquidity, for flexibility. You can withdraw your cash. You can redeem a portion of your cash at any time. So in many ways, it's a bit like a fixed deposit, but much better yields over time. It invests in government securities. It will take some bets in the stock market as well, but it's a very, very low risk investment vehicle that's really designed for capital preservation, and it's been very popular. It's yielded really well over the years. So that's a place to start. Other areas that are reasonably low risk that you might want to look at. I really like commercial paper. Commercial paper is buying bonds basically in corporates. So if you have a secure corporate like a Dangote Group or Flour Mills or UAC, publicly traded companies that are looking to raise some short to medium term debt, and they go to a financial advisor like an investment bank or the other, who will do a commercial paper raise for them. They will basically issue commercial paper to different investing entities and individuals. And the idea is really, it's a fixed yield, but it's a term, it has a tenor. So it might be a 180-day commercial paper. It might be 360 days, so 6 months or 1 year. And you know that at the end of that, if you have invested, whatever, if you've invested 100,000, 200,000, and there's a yield attached to it, could be 10%, could be 15%, 17%, at the end of 6 months or 1 year, you are getting that cash back plus your yield of 15% or whatever it can be. And it's low risk because you are basically betting on the credit quality of that institution. And if it's a secure, successful, credit-worthy business in Nigeria, like a Dangote Group, like a Flour Mills, you can pretty much rest assured that you will get your cash back. And it's a nice way to just put some capital away, you literally forget about it. When the money comes in 12 months' time, you may have even forgotten that you put it down in the first place. So it's a nice way to cautiously and in a low risk manner keep yourself from touching that money, and you get it back at the end of the day. Talked about money market funds, treasury bills. The best way to really access government securities is really through a mutual fund. And most banks, most financial advisors will offer a basic mutual fund, as I've said. Now, stocks, the public markets, it's a riskier play. Again, if it's strong, credit-worthy companies, investing in their stock is very different from investing in their commercial paper. With commercial paper, you are fairly guaranteed. No investment is 100% guaranteed, but you are really 99% guaranteed to get your money back with the agreed yield at the end of the day. With equity, you are buying equity in the business, and the liability of the company is limited. They don't really owe you anything if the company does go into distress. As you've probably heard in the past, debt holders sit higher on the cap table than equity holders. So companies are obligated in a situation of bankruptcy or forced liquidation, they're forced to pay back their note holders, the people holding commercial paper or the banks that they have borrowed from. They're obligated to settle those people before the equity holders can partake in whatever is left of the company. So it's a risky bet, best done through a trusted broker who knows what they're doing in the markets. And I always say, if you're looking at your total assets, let's say you have 500,000 Naira that you want to invest in different things, do different things with different money, again, depending on what stage of life. If you just don't want to lose money, you want capital preservation, then maybe you shouldn't necessarily be in the stock market. If you're willing to take a little bit of risk, then diversify a little. Do some commercial paper, do some mutual funds. Then maybe you can invest a little bit in the public equity market. You can also do that through a mutual fund that's slightly higher risk than a basic money market mutual fund. It's a fun place to play in. And today, with all the technological advancements that we have, you can trade securities in China, in the US, in Europe, just on your phone with your own trading account. So if you have a little bit of money you want to set aside to play with and see what you can make in the stock market, by all means do it, but don't bet the whole farm on that strategy. It's higher risk. Now, I want to, before I talk about broader opportunities, I want to talk about currency and inflation. Obviously, right now, there's a lot of concern about what is happening with the Naira, and that's very understandable. The Naira has slipped. It has depreciated somewhat artificially over 30%, honestly, since the beginning of the year, and it still hasn't settled. We entered pretty much free fall mode. As those of you who watch the markets, you would note that we went from about 360 to the dollar on the parallel market to about, I think we got to a high of sort of 460 or 470 before we came back down. I think right now, the official parallel market is maybe trading around 430 or so. But if you're actually looking for dollars, because of the scarcity in dollars in the Nigerian market right now, you're looking at parallel rates on the order of 350, 360. 450, 460. So it's obviously a lot higher than what we were seeing just as early as January. And it's our own depreciation issues have actually been triggered by a lot more than just COVID. We were already facing this. People probably started to hear rumors back in November, December about what was going to happen with the Naira. We've all seen that oil prices have taken quite a dip globally. And we know our Nigeria and how much dependence our government budget has on the oil sales. So prices obviously affect us quite a bit. So there's that. There's also been moves, federal government moves on the CBN, treasury bill yields have softened considerably in the course of the past, say about 9 months or so. So we're facing a lot of internal shocks. And then COVID happened, right? And then COVID happened, and obviously all of us, whether you're an entrepreneur or you work for a corporate, you have certainly seen in your own businesses the impact of COVID-19 on business. So it's a shock layered on top of a shock on top of a shock. So a lot has happened that has had a significant impact on our Naira. So people are, of course, wondering, is Naira really the currency to be in? Well, it's the currency that we spend here. So to some extent, we're all going to have to be exposed to the Naira. But from an investment perspective, let me say this. If you can get your hands on some dollars, it is not unwise to convert some of your Naira to dollars. If you're looking for safe investment presently, now Nigeria has historically always enjoyed fairly good and fairly secure yields on government securities. I mean, our government securities this time last year were probably trading at 12, 13, 14%, which is fantastic. You wouldn't see anything like that in the US, maybe it's sub 1%. So the Naira has always been able to yield quite nicely on our own government securities. So this has been a shock, but because of what's happening with depreciation, we haven't really had an official devaluation. CBN has not come out to say they're going to, or taken any action that suggests they're going to defend any particular rate. So until that happens, it doesn't hurt if you have some extra liquidity and you're able to access a dollar, and maybe you have a domiciliary account, to put some money in dollars and just hold it in the DOM account, just hold it there. Just so that at least you're not losing simply on depreciation and maybe an eventual devaluation. It is not an unwise thing to do if you have a little bit of money that you can set aside. And I can assure you, we're not going to be here in this economic position forever. The markets will have to bounce back if we all just roll up our sleeves and keep working and try to drive our economy forward. We will get back to some normalcy. Our currency will settle at a certain price. Government will start borrowing again. In fact, government has announced some fresh capital that they want to raise from the public. And also the CBN has announced they're pouring a little bit more dollar into the system. It's slightly restricted, but the moment they make moves like that, you start to see some softening in the parallel markets, which is why we went from 460 to about 430 over the past few days. So it's safe to say that we will rebound from this. It's prudent if you can, and you can get access to the dollar a little bit, to maybe move some money to dollar until we see where the Naira settles out. Now, if you're going to stay in Naira, obviously many of us, we have expenses in Naira and can't really afford just to move all the money to dollar. If that's the case, don't be worried about making some basic investments in mutual funds, in commercial paper, if you can find it. Those things are available and they're still secure. The yields may not be as strong as we saw this time last year, but if you have a slightly long-term outlook and you can just let your cash sit for a little bit, I still think for strong investment plays, it is still very feasible to put your money somewhere. Don't just, if you don't need the cash, I don't think you just want it to sit in the bank, because it's just going to depreciate in value. And also we are going to have inflation. You can imagine, we've already seen prices coming up. There is going to be an uptick in inflation in our markets in the coming months until we settle out a little bit. And so we should prepare ourselves for that. Finally, I'll just touch on, if you're a more savvy investor, if maybe you've been investing for a little while and you have some considerable cash and you're wondering, what are the good opportunities beyond the basic opportunities in mutual funds and commercial paper and stuff right now. There is a lot of distress in the market. And much as, nobody wants to take advantage of anyone's distress, you do have business owners, you have folks holding on to investment securities that may be looking for cash and are willing to take slightly lower valuations to liquidate that cash. It's a trickier market, harder to get access to some of those types of secondary sales. But it is worth, my business, my area is alternative investments. We make private equity investments, which means we invest in private companies. And it's a very specialized area. It's quite, it's very, very long-term, much higher risk than any of the types of investment classes that I've talked about. And they're quite high minimums for individuals who want to partake in the area. And that is really just designed to protect the investor. These types of investments, as I've said, they're risky, they're long-term, they're not liquid. You know, if you invest in a private equity fund, you are in the fund for a good 10 years. And yes, there will be some distribution of income over that time, but there's no option to just, redeem your position entirely. So it's higher risk, but in our area, we are finding opportunities to buy businesses on the technology side and in other industries as well, financial services, consumer, at slightly more attractive prices, just because many businesses are looking for that investment right now. So that's a bit of a different asset class that's more institutional in focus, but I thought I'd touch on that. Real estate is always an interesting opportunity in Nigeria. I think we all see, just driving down the road, you see so many properties that are just laying waste, and they do have owners, and sometimes you can find owners who are in distress, who are willing to sell, or folks who are just looking to diversify into other areas. Again, a lot of these things fall within the alternative investment market, which is a lot more specialized. And you do have some specialized fund managers that have turned some of these opportunities into more retail accessible opportunity. By retail, I mean the more consumer or individual market, as opposed to for institutional buyers. So some have been able to make offerings on the agri side, on the real estate side, in a slightly more retail-friendly format. So there are some options there that are available in the market. Maybe one final point I'll make that again goes back to those of you who have your own companies, those of you who are entrepreneurs, because sometimes, financial management goes beyond just your individual management of your individual finances. I did mention always try to separate the finances of your business from your personal finances, but I can imagine that many small companies, many SMEs are also feeling the bite. Now, there are a lot of programs, as I'm sure many of us have read in the papers and the like, a lot of programs that the government has been rolling out that are really accessible. If you do have a business and you have an opportunity to apply for a relief program or a relief package for your small businesses, I can tell you with some certainty that the Nigerian government is quite focused on SMEs right now, and for the long term, they really are. There is definitely a sense that it's our SMEs that are going to lift up our economy in the coming years. So I know that there's a lot of focus from government on just making sure that we can sustain and grow many of our SMEs. So many of these intervention programs and packages are available to businesses. There are obviously limitations and things like that, but it's certainly worth trying. Debt, small businesses are often quite indebted, and it's important to make sure that you are speaking, if you are in a situation like this and you do have creditors, it's important that you are speaking to them. You're trying to take care of your most expensive debt positions, those with the highest interest rates before the others. And if you are in a position where you just can't pay in the near term, certainly don't be shy about, approaching your creditors and having discussions with them about restructuring the payment plan. The interesting thing about what we're going through right now with COVID is that the whole world is going through it. Everyone is going through it. If you have a business and you're indebted to the bank is also going through something. So this is not one of those times where it's just, your business or one business that is struggling from something inherent in that business. This is a global crisis. And, nobody is oblivious to the fact that businesses are struggling, individuals are struggling. I have been quite impressed to see how flexible Nigerian government and Nigerian banks and institutions and individuals have been with respect to trying to take care of other people and other businesses that may be struggling at this time. So if your concern is for your business, definitely open yourself up to access the flexibility that has been provided for out there. Okay, I think I've been talking for way longer than I intended, so thank you for bearing with me, but I think I'll stop there for now and maybe open it up to questions.
Okay, thank you very much, Ma, for that insightful presentation. I believe everybody here has learned a lot. Personally, I've gained a lot today from just listening to you. So what I'll do is I'll do a quick recap of your presentation, and then I would allow people to ask their questions. Please, we're running out of time, so if you have questions, please raise your hand. We will take all the questions together and she would answer them one after the other. So please, if you have questions, please prepare them as I just briefly recap. I can see some people's hands up. Please, PD team, please help me confirm or manage the people raising their hands. After I recap, then she'll take the questions. Okay, so the number one thing is that we should not be scared of the money that we're put in our bank presently, because nothing is going to happen to it. Yes, and then we should not be shy to mention that we don't have like deep knowledge of investment opportunities, or we don't know how to manage our money now. And then the second thing that you mentioned was budgeting. You budget, so we younger ones, I believe that is something that we should start doing. So in addition to iExpense, which you mentioned, I use Money Manager as well. So if you're looking for apps, iExpense, Money Manager would help in your budgeting plans. And then please, for people that are married now, for people that are yet to get married, please teach your children the basic finance principles. I watched a video on Instagram where a father and his son were talking about things, and then I was really in awe, and then you just mentioned it again. So please do not hesitate to teach your children at a very little age. And then for entrepreneurs, please separate the finance of your business and your personal finance. It's not good for you to mix both of them together. And okay, I just mentioned, don't just leave your money in the bank. As you rightly said, there are major or good investment opportunities that would give you guarantee for your money or security for your money, and also ensure capital preservation. And it is good for you to start from somewhere, no matter how little. Try and start from somewhere. And it's not just saying that every other person is investing, I want to also invest. It's important for you to have at the back of your mind the reason why you're investing. If you're investing for your grandparents, there's a type of investments that you would undertake. If you're investing for your family, there's a type of investment you're going to undertake. If you're investing personally, then there's a type of investment you're going to undertake. And it is always important for you to speak with an investment advisor to give you the right investment opportunity that fits your purpose or that fits your goals. And then, okay, yeah, and then she talked about the wedding bit. I think a lot of us, when we come like, oh, my wedding is going to be hot, my wedding is going to be fire. She's saying that please do not go bankrupt because you are planning a wedding. There are other things that are more important aside the day of the wedding. Okay, so going down to the investment opportunities, she said you can start with your bank. There are low risk investments you can take advantage of. So the ones she mentioned were, first of all, mutual funds, and she mentioned the FBN Quest mutual funds. So please, capital preservation, liquidity, flexibility, so you can take out your money. Well, part of your money at any time. You're not losing a lot. And maybe when Treasury bills is gaining and equities is losing, there's a balance. And then she also mentioned commercial papers. Commercial papers are discounted instruments and low risk as well. And then she also mentioned that the best way to invest in Treasury bills are through mutual funds. And then she also mentioned the stock market. Unlike the other instruments which I just mentioned, which are more like debt instruments, the stock market will be that you're taking a part ownership in the company, and they are really not under any obligation to repay you maybe when they have a financial issue true. And then if they have to holders, so yeah, equity, yeah. And then if you have to invest in equities, you have to go through a broker. And then now there are sophisticated trading apps that can help you to trade securities all over the world. So Ma, please, I don't know if you would mind informing us or letting us know about those apps so that we can be aware of it. And then finally, she mentioned currency/inflation. She said that, well, the country has already been in trouble. Let me use that word, before COVID, and then there's been depreciation of the Naira and then the oil saga. So it's very important now that what we should try and do is preserve the value of our Naira, or preserve the value of our money. And then we can do that by converting some of our money to dollars. So if you have a domiciliary account, you should please just move some money or convert some money to dollars, so we don't lose, especially with the depreciation and devaluation. And then for more savvy investors, for people that are very liquid, and so people that have a lot of cash, private equity investments are available for you. Real estate investments are available for you as well. And then for people that have small businesses, there are intervention programs that have been rolled out by CBN. So please, you can take advantage of it. And then if you're in debt with any of your banks, that you should try and speak to your bankers to try and restructure the debt. I think this is a summary of what she spoke about. Thank you very much, Mai, again. So we'll quickly take the question. So if you would like to like read out or mention or ask your question by yourself, please, you can. Let's start with sorry. Okay, sir, please hold on. Okay, so Mary Esther has a question. So please, you can start.
Okay. Hi, thank you so much, Ijeoma. I hope you can hear me.
Yeah, very well.
Yes.
Okay, great. So I have a couple of questions, but I'll try and make it very quick because I want other people to be able to ask their questions as well. And because these were some of the questions that we got even before we invited you in. So some of the things that people wanted to take away from this session was they wanted to know, like, as a young person within the typical YCP age brackets, we are getting 25 to 40. How can you, what would you advise? So, when you spoke about diversification, I mean, there's 100%. So what portion would go to what? I mean, what's an ideal mix from your experience? I mean, it's not a definite, but, what would you say is? Then another thing we wanted to find out was if you could help with like a, well, I won't call it a practical scenario, but let me just say that, for example, some people think that they're earning so small. Some people are saying, well, at the end of the month, all I can keep aside is maybe 20K. And all these big names, mutual D's, something, commercial paper, how is my money, should I be shy to take that to the bank to even ask questions? Should I be in a position to have that conversation? Mm-hmm. Then the other thing was, you mentioned some instruments already, which she recapped very nicely. People would like to get a sense of what kind of yield are we looking at? What kind of return? You're saying, it's pretty safe, it will preserve your capital, it's not too risky. So what are we looking at? 1%, 0.00, because not a lot of people have a finance background. So I'm sure I'm asking the question for as many people. The other thing you also said was to hold dollar, which we had the session before where we were advised to do that. Thankfully, dollar hadn't gotten to the 400 levels. But right now, dollar is trading at almost 450 thereabouts. Would you still say that if we had some excess liquidity, it will still be a wise thing to go in, and even at that point? Are you saying that we're looking at 600 levels in the future? Or, would you think that even if it were to come down, it wouldn't go below the 450 levels? And I think the last thing was I wanted to ask as well was about the P, when you mentioned the alternate kinds of investment, the ones for the more, for the thicker pockets guys. We wanted to know what kind of return are you looking at, and what kind of money do you have before you to get the confidence to go and approach a PE person to say, I want to invest in this space? Do I need $100,000, $1 million, or will my 200K do it for me? So those are my questions. I'm sure I'm also echoing the thoughts of some other people in the house that may not have the chance.
Yeah, sure, Mary Esther. So I'll go through these quickly. You asked about the ideal mix in a diversification pool. So it's a good question, but it's also a very, it varies by individual. It varies by the individual. I like mutual funds for folks who are starting their investment journey for the first time. Investing, some people feel they only have 20K. Fantastic. The minimum for our mutual money market fund, which is our most popular fund, the minimum is 5,000 naira. You can open an account with 5,000 naira. And this is a fund where this time last year, yields were on the order of anywhere from 13 to 16% annualized, which means that if you've invested 100,000 in the fund, year. When you say the diversification mix, it really depends. If you have immediate needs for cash, and you don't, for some people, if you already have a savings account in a bank, I would say take all that savings out and put it in a good mutual fund, a good money market fund that's focused, that's low risk and focused on capital preservation, because your yields will be a lot better. I mentioned 15% returns. This was like last year. Returns have softened a great deal because Treasury bill yields have softened. So now we're talking about sort of, I think at the moment, maybe around 5 or 6% annualized. So with 100K, that goes from a 16,000 gain in a year to like a 5,000 gain in a year. However, that is going to change. I do definitely see these yields strengthening over time. Investing is always about volatility. But if you have a reasonably long-term outlook and you're really just focused on that capital preservation, you can actually do quite well for your money. So in a diversification pool, I always say a mutual fund is a good place to start, because a mutual fund already has natural diversification within the fund. They will do CPs, they will do government bonds and treasury bills. They will do a little bit of public equity, stock market positions as well. And it's managed by very professional portfolio managers who know what trends they're looking out for and when to take more of something and less of another. If you want to manage your own portfolio diversification, the thing about commercial paper, I really like commercial paper, but it's not, it doesn't come all the time. Maybe in a given year, you might have maybe 2 or 3 companies that have done issues, good companies, because you only want to buy the paper of strong companies. So really, if you have the opportunity, if you have a portfolio that you want to invest, if you have like 500,000 naira and you want to put it to work, you might say, I can put all the money in a mutual fund for now. If I see a good commercial paper opportunity, maybe I take about 20 to 30% out of that and put it in the paper. If you want a little bit of currency diversification, you can take 10 to 20% out and convert it to dollar at a good rate. But that's not, it depends on what's available, and it depends on your need for liquidity over time. I think we touched on the small, people are intimidated because they may only have 10K or 20K. Start there. Just take 5K, come to me, call me. I'll put you in touch with our relation. You can make deposits directly on just move money. You need a little bit of liquidity, maybe if you have a cash need, you can just redeem on your phone. It's very more money, and even if it's just 20K, 50K, 100K, start there. Really start there. The yields, I think I touched on a few of the yields. Last year was a great year. Really, the Nigerian investments, government invest securities have actually really done quite well over the past few years, but we're at a low point in the cycle at the moment, and it has been exacerbated by oil prices, now further exacerbated by COVID-19. But I do believe that we will rebound. So again, now you're looking at T-bill yields at maybe around 3 or 4%, maybe a little bit higher, depending on the quantum that you're investing. And then we talked about the Naira. This has been the golden question right now. Honestly, I joke, but I say that the Naira is really in free fall at the moment. We don't know where it's going. Depending on who you talk to, it's all speculative. You'll get some financial services professionals that will tell you, we think we're gonna still, the rate will soften a little bit. We'll get back down to around 400. Some think the Naira can go all the way to 550. We just don't know. I can't really make a call because we just don't know. But I'll say this, in 2015, our currency devalued by 100%, 100%. We went from 150, we skyrocketed to maybe like 500, and then it came back down, settled a little bit at 300, then went up to 360. And I'd say we've been at 360 for a good, 4 or 5 years now. So you really can't tell. That was 100% devaluation. And do I think it'll be that bad this time around? I don't think it'll be 100%. I wouldn't be surprised if we settled out at 550. It's just hard to say. Just last week, we were at 460 in the parallel. Now we're down to 430. So it's really hard to say. And you're right. It's a bit of a nerve-wracking time to take Naira and convert. I think if you don't really have cash to play with which most of us don't, maybe just stay in Naira for a little while longer. The government has shown its hand somewhat. They are intervening. They have issued more hard currency to the banks for certain, for SME school fees, this, that. And I think they'll do a little bit more, and maybe we'll see some more softening, but it may come right back up again. If you have the opportunity today to trade at 420, I would say do it. You won't find that today, but if we get to that point, by later this week or next week, I would say take it. I'm not a fan of trading at 460. I think it's too high. So, but it's all speculative, honestly, guys. And if you don't have the stomach for speculation, then just stay in Naira for now. That's what we all need for our livelihood. So just stay in Naira for now, if that's the case.
All right, thank you very much, Mary Esther. Please, did she answer your question?
Oh, yes, certainly. Thank you so much, Ijeoma.
Okay, yeah. Okay, great. Quickly, we have
I have a few questions.
Sorry, please just limit it to one so that others can ask. Thank you.
Okay. Which is my most important question. Okay. What do you think about investing in Eurobond as opposed to just keeping your money in your FBN Quest Eurobond work? What's the spread? Is it preservation fund, or what's the risk level attached to it? Thank you.
Sure. Good evening, Ijeoma. Thank you for reminding me, because I forgot to mention Eurobonds as an option for currency diversification. So our FBN Quest Eurobond Fund is regarded as a medium risk fund. It is the strongest performing Eurobond fund, has historically been the strongest performing Eurobond fund on the Nigerian market. Now, the one thing I'll say about Eurobonds, it's a good play, rather than keeping your money in a domiciliary account. However, you need to have a stomach for risk. With Eurobond funds, your money, your card currency will be traded upon. It's a little bit, you need to have a little bit of a longer term outlook than you might have with a money market fund. You can't redeem, if you make a deposit in the Eurobond fund today, you can't even talk about, there's a lockup period of, I think, about 6 months before you can even redeem. And that's for good reason. Within the first 6 months, you might even find, if you deposit, $5,000, you might find that your money has reduced to a valuation of $4,000 within the first 3-4 months. But if you wait, maybe 18 months or 2 years, you can find that your capital has appreciated, 10, 14%. I'm just speculating. It depends on market. It's tricky in recent months because we have had some international investors who have chosen to withdraw dollars and take it to where they are overseas. And you will see those shocks. But I say you really have to have a very long-term mindset. Deposit your 5,000, your 10,000, your 50,000, however many dollars you want to invest, and just let it be. It's a long-term strategy. If you want to do it, leave it for like 18 months. Don't ask too many questions about it so that you don't get a bit nervous about the fluctuations. It's a risk. It trades on the market, and it's priced daily. So there will be ups and there will be downs, but over the long term, it has been seen that our investors have performed better than what they might have gotten if it was just sitting in, obviously, a DOM account or even sitting in a bank overseas. It's been quite successful, but it's very much subject to market shocks. So I'm happy to, I'll make some notes about things I'd like to share, after the fact. There was a question about trading apps, online trading apps. So I'll share some of those, and I'll also share with you the teaser for the Eurobond fund to give you some more information about how that fund has performed and is invested.
Okay, thank you very much. Before people keep asking their questions, I just want to take some questions on the chat. So Naza is asking, how can one get access to a financial advisor if he or she doesn't have one? And she's asking again, could you throw more light on agro investments? And then Chinemera is asking, I have most of my savings in the money market mutual funds in FBN Quest. I was wondering why you can't get all your money if needed. I understand that the interests are added every quarter. I don't know if you understand the question.
Sorry, could you repeat that question?
The last.
Mm-hmm.
I have most of my mutual funds in FBN Quest. I was wondering why you can't get all your money if needed. I understand that the interests are not and are added every quarter.
So I'll start with the last one. You're invested in the FBN Quest Money Market Fund. You do have the option of redeeming your full account. When you set up the fund, you decide if you would like to have your quarterly your quarterly dividends either reinvested in the fund or if they should be paid out to you. And if you decide that you have a liquidity need, you have a need for cash, and you want to redeem your entire fund, absolutely, you can speak to your RM and fill out a redemption form via the FBN Edge app on your phone and get that redeemed. If you're having an issue with that, maybe after the fact, you can just drop me an email and I can send it to our folks on the asset management side to see if they can get that sorted. The financial advisors, yes. So, if it's of interest to anyone on the call, if you would like to meet with one of our financial advisors at Quest as a group, maybe if there are 2 or 3 or more people who maybe want to have a Zoom call like this or something set up where a financial advisor can speak to you about your own personal situations, or if you'd rather do it one-on-one, that can definitely be arranged. It's what we specialize in at FBN Quest Asset Management. This is one of another one of our entities within Quest, and that can certainly be arranged. It's not a problem. So just let me know, and there's even a hotline that I can share with you, and you can automatically get attached to one of our financial advisors who can start this journey with you. And I'm happy to intervene there if you need. Somebody, I think the question was on agro investing, agro funds. Yes. So I really like investments that have to do with food because I think no matter what is happening, whether there's a crisis, whether there's a market crash, people just have to eat. And I do think agriculture is becoming an increasingly more interesting theme in our market. If you can find a good fund manager managing an agri-fund, and you have some visibility into the types of yields they're attracting and their strategy, and it's something that you're comfortable with, by all means, this is one of those things, this is one of those types of investments, even on the private equity side, we have folks who manage agri-focused funds. But some retail investors in our market have managed to put together retail funds for agri, which are basically funds, they're really like mutual funds. They're a lot more liquid. They have very, much smaller minimums, and they can give you instant exposure to the agri sector in a number of different ways. I have seen some of those where they have been wrapped with, insurance wrappers that sort of help to preserve the income of the individuals investing. So as a strategy, I think it's quite strong. There's a very strong food theme in our market right now, but you just need a very good manager managing that type of platform. I'm not opposed to it. I actually like a lot of what's being done on the agri side, but it just has to be very well managed. If you have certain funds that you've heard of, and maybe you want to pass their names along to me and I could take a closer look. I can ask around about that.
Okay, thank you very much. Quickly, we'll take, please, we can see a lot of questions in the chat room. We're sorry we might not be able to take everybody's questions because of time. So we'll just have Joseph Ayodele, Christine, Chibuzo, Chimezie, and Omoefe. Omoefe, I see that you've asked your question on the chat room already. So let me just quickly say it. What do you advise about real estate as an investment vehicle at this time?
So, real estate is a very broad asset class. So real estate on a whole can go very well. It can also go very wrong, to be honest. The sub-segments of real estate that I personally like, student housing, I think holds a lot of promise in our markets. These are literally private companies who establish, student dormitories in different regions, near schools, near universities, and offer subsidized rent to students. And sometimes they do this in partnership with the universities. Student housing can be quite good. Commercial real estate, I think, holds a lot of promise as well, depending on what type we're talking about. I think housing, residential real estate is a little bit of a trickier area. There is some, I think if you have a real estate manager who should tap into low income housing in a favorable way, maybe in conjunction with government parties as well. That can attract some strong yields, but you really need a manager that absolutely knows what they're doing. There was a time when shopping malls as a real estate option became very popular, and I can't say those have done, remarkably well. But the areas I've mentioned, modestly priced commercial real estate, student housing, and maybe low-income real estate, if properly managed and properly offered, can all do fairly well. A little bit harder to access, those types of opportunities. They fall within the private equity space, or at least the alternative investment space, I should say. But if properly managed, one can do well in those. And outside Lagos as well. When we think about real estate, everyone thinks about Lagos. Lagos is I think it's a very overpriced market, to be honest. And I think as Nigerians should be looking at a lot of our other markets. Look to the east, look to the north, look to other parts of the state. And I think, even ourselves as alternative investment managers, we've been talking about maybe taking a closer look at some of our other markets in Nigeria outside of Lagos, maybe post-COVID.
Okay, thank you very much. Joseph, please can you quickly ask your question?
All right, good. You can hear me loud and clear.
Yes, I can.
Now the question is straight. You were rather subtle about cryptocurrency and fintech, fin currency, that is, let's say fin currency, that's things that happen online these days about Bitcoin and a lot of things we hear that are happening. As young persons, this is something that is I don't want to say topmost on our mind, but I say it's taking a pride of place in our mind. So what do you have to say about that, just to help clear the air so we can know what we are up to, if we are doing something risky or it is promising?
Sure. No, thank you for your comments. So cryptocurrency, Bitcoin and the like, maybe I'm just old. I prefer good old fashioned known currencies. Now, cryptocurrency has not really proven itself as a medium of exchange. Where people have started to maybe make a little bit of money on cryptocurrency is just trading the crypto itself. How I'll have a live with it a little bit, no harm there. I am still waiting to see that model getting proven out. And I think it's been out there long enough that I would think that we would see a little bit of, just strength of concept from it by now that I just haven't seen. I'd like it to get a little bit more popularized, a little bit more acceptable. You don't find a lot of banks and financial players even offering anything in the space, which is usually a good indication that it hasn't yet, reached a point of wide acceptability. It's very speculative. But I do, I have seen a few people, do some trades and make a little bit of money. Not something you should bet the farm on. You have $1,000 extra somewhere and you just want to play around and see how it works a little bit, by all means. But I still think it needs to prove itself out a little bit more. Still very speculative in my view. And you can't really trade with it yet. There's not a lot you can actually buy with it. You can only trade the currency itself. So I'm not there yet on cryptocurrency. I'm not yet convinced.
Okay, thank you very much. Chibuzo, please, can you quickly ask your question?
Okay,
Hello,
thank you. Good evening. Yeah, am I live? Okay.
Yeah, Chibuzo.
All right, good evening, Ijeoma. I had so many questions, but a lot of them have been addressed. The others, I think we can address via taking your offer on financial advisory, offline after this. So we can deal with so many other questions I have to ask: equity versus debt at this point, the one about Forex, investing in the current stock, what's better and all that. Now, but the other question I want to ask here now is, YCP is about, bringing up people's Catholic faith as well as, so we look out for and invite people like you who have excelled in their profession and without losing their faith. And that's what's admirable to us. And that's what we look out for, we seek to admire and emulate. So my question is, what has been your challenge with regards to your growth in profession vis-a-vis your faith? Have there been decisions that threatened your faith at any point? Could you share if there is? And then lastly, how do you stay grounded? How do you look at what you've achieved and look at the size of the portfolio that you control, and then you still pleasant to the cleaner that comes up to you to say hi? How do you do that? Thank you.
Yeah. Thank you, Chibu. It's a very good and relevant question. A bunch of things. I just constantly stay in the faith. I'm very inspired by the Opus Dei theory, for lack of a better way of putting it. Jose Maria Escriva is my own personal patron saint. And I chose him because of, our life. We spend more time in this working game than we even spend at home with our families. And if you're going to spend the majority of your time on something, and you're a person of faith, you have to have something that keeps keeps those two somewhat connected for you. I try to stay in the faith always. I attend mass every day. If I don't make it in the morning, then I'll go in the middle of the afternoon at work. I do like sometimes going to mass during the day at work, because it's a way of, you've had your morning in the office, you sort of run to mass, maybe you're off to a meeting straight from mass. It just keeps the Lord part of your day. And I pray a lot at work. I always have a sticker on my computer that just small coded prayer. So before certain difficult conversations I may be having with a member of my team, or before a meeting with a client or whatever, I just constantly pray, even if it's a quick Hail Mary, even if it's just, you can run to the bathroom and do a quick decade of the rosary. Just try to keep the faith part of your day. I always have, I have one right here. A miraculous medal. I just have some sort of a symbol from the church, whether it's a cross on your desk, something small and subtle if you don't want everyone to see it, a cross or a small statue of the Virgin or Lady, or a picture or something like that, just to constantly keep you in the faith and pray about everything constantly. You're about to write a report, just very small things. If you need to, I also have some apps that I work with that remind me, that send me a Bible verse every, couple of hours. It just keeps you constantly in the faith. Finally, you talked about staying grounded, and if there are difficult situations, we're in Nigeria, there are all kinds of things that happen every day when you're out engaging with clients or with companies. Things come up that are beyond our control and maybe beyond what you might be comfortable with. Don't be afraid to walk away from a situation if you find it unsavory, if it doesn't align with your faith. I can tell you, I've never had a situation, and obviously make sure you're working with people that values. My boss at FBN Quest and I have known each other for a long time. It took me 5 years to accept this job. I was still living in London when he first started talking to me about it. I was working for a different company. But it took me that long really to just get to know the people, to get to understand what I wanted to do within the business, and to just make sure we're aligned. I'm not saying we're all of the same faith, or we're all, the same in that way, but I had to make sure I was working with a group of people where my own personal morals and standards would not constantly be challenged, and I'd be constantly questioning myself and what I'm doing here. Don't be afraid to say no. Don't be afraid to raise it with your own boss if it's a crisis of integrity. And if you feel you have a boss that you can't raise that with, I would say you're in the wrong place. So just stay in the faith, stay prayerful. Any difficult situation, have a bit of a community around you, which obviously you guys certainly have. Have a community of people around you who can advise and talk. Have mentors that are similarly ilked to you, and you have our Blessed Mother. She'll get us through everything.
Okay, thank you very much, Ma. We'd like to apologize to everyone at this point. We will not be taking any other question. We are way past our time, but we promise that after this session, we'll collate all your questions. So please, if you have any questions, please meet any of the PD team members, drop your questions down, and then we'll sort of do like an FAQ of all your questions. We'll forward it to her. When she responds to them, we'll send it back to you people. Thank you very much, Ma, for gracing us with your presence.